Good afternoon. I'm Lisa Padmore, Chief Executive Officer of the Institute of Chartered Accountants of Barbados, or ICAB, and this is Talking Business with ICAB. On February 24th, the Government of Barbados laid the draft estimates of expenditure and revenue for the financial year 2026 to 2027 in Parliament. This is a significant annual event in our country's financial calendar. The estimates set out in detail how government plans to raise revenue and how much it intends to spend during the year beginning April 1st, 2026. To understand the estimates, it helps to begin with the way government records its financial activity. There are two main accounting methods used in public finance: the cash basis and the accrual basis. Under the cash basis, revenue and expenses are recorded only when money is received or paid out. Under the accrual basis, revenue and expenses are recorded when they are earned or incurred, regardless of whether cash has been collected or paid. The accrual basis provides a more complete and realistic picture of financial performance, but the cash basis is simpler and easier to implement. In Barbados, the accrual basis is used for government's financial statements in accordance with the Public Finance Management Act of 2019, which commits the country to using International Public Sector Accounting Standards, or IPSAS, for public sector reporting. However, under the first two BERT programs, the cash basis was used when the government reported financial information to the International Monetary Fund. Understanding the difference between these two methods is important because the estimates include both accrual-based and cash-based information. Let us look now at the numbers presented in the 2026-2027 estimates. Government revenue generally comes from three sources: tax revenue, non-tax revenue, and grants. Tax revenue includes personal income tax, value-added tax, corporation tax, and duties. Non-tax revenue includes fees, licenses, rents, and income from government services. Grants may come from international partners or agencies. These revenues finance a range of government obligations. One of the largest expenditures is personal emoluments, which reflect the salaries and wages of public sector employees, along with government's contribution to the National Insurance and Social Security Scheme. Another major category is goods and services, which includes the day-to-day operating costs necessary for ministries to function. Government must also make debt service payments, which include interest and principal repayments on debt. In addition to these, government pays transfers, which are payments made without receiving goods or services in return. These include pension payments to former public servants, subsidies, grants, and support to statutory corporations and non-governmental organizations. Turning to the projections for the next fiscal year, on the accrual basis, government's current revenue for 2026 to 2027 is estimated at $5.28 billion. On a cash basis, revenue is projected at $5.18 billion, which represents a 34.3% increase over the revised estimate of $3.86 billion for 2025 to 2026. Total expenditure on the accrual basis is projected at $6.14 billion. Of that amount, $5.16 billion is expected to be spent on current expenditure, covering operations and debt interests, while $973.8 million relates to capital expenditure and amortization. When converted to the cash basis, total expenditure is expected to be $5.06 billion, exclusive of amortization, with current expenditure of $4.18 billion and capital expenditure of $889.8 million. A key indicator included in the estimates is the primary balance. This measure compares current revenue and current expenditure, excluding interest payments on debt. For the 2026 to 2027 fiscal year, Barbados is projecting a primary surplus of $817.5 million, or 4.8% of gross domestic product, which signals that the country expects to take in more revenue than it will spend on its non-interest obligations. The creation of these estimates is an extensive and highly detailed process. It rests on the expertise of public sector professional accountants and their teams, led by permanent secretaries and supported by technical teams across ministries and departments. The work begins at least 6 months before the end of the fiscal year and requires careful analysis of spending needs, assessment of program priorities, revenue forecasting, and the preparation of both accrual and cash-based information. These professionals ensure that the figures submitted to Parliament are credible, transparent, and aligned with national goals. ICAB salutes these dedicated public sector accountants for their commitment, professionalism, and contributions throughout this demanding process. I'm Lisa Padmore, and this has been Talking Business with ICAB.